Euro-dollar should be an awful lot lower if you look at the rate differentials. If you look at Spanish bond yields, yes, they are a little bit lower at the moment, but I certainly think there's more potential upside in Spanish bond yields than there is downside, given the fact that we're getting deteriorating economic fundamentals coming out of Spain as well as Italy. France is probably the next shoe to drop with respect to that, and the economic data continues to deteriorate.
Okay, the economic data is getting worse, but European stocks are on for their 6th monthly rise in a row. That doesn't suggest investors are particularly concerned.
No, it doesn't, or they're very complacent, one or the other. But let's look at where European stock markets have been over the past 4 to 5 months, Jamie. They've traded sideways, essentially. We made 3-month lows this month in November, and we're just off the September highs. So we've not really gone anywhere. Yes, we've closed, or we'll look set to close for the 6th month up in succession. But in the context of where we were at the beginning of the year, we've gone nowhere.
So what do you do then between now and the end of the year? I presume from what you're saying you'd be a seller of stocks and a seller of Italian and Spanish bonds.
Pretty much. We're at the top. We're sort of approaching the top end of the trading range that we've seen in European markets over the last 6 months. I still think that you've really got to have a bit of a defensive bias going forward. I certainly think there's more downside in euro-dollar than there is upside, and I certainly think, given the current uncertainty, not only over here in Europe but also in the US, you really have to adopt a slight defensive posture. And you made the point yourself, Jamie. Volumes are very low, which suggests to me that investors are sitting on the sidelines.